Hey guys, it's Chris. Welcome to another IPOE or newly SOFI video here today. The SOFI Army is going to get another update from me, as well as my reaction on SOFI CEO Anthony Noto going on CNBC. We're going to discuss some things that he talked about, my reaction to it. The first time I'm watching it here, and I assume some of the bullish trends that we can expect for this company going forward. All right. So, and not to mention, we're going to talk about my position, of course, and whether I still think it's a buy and where I expect it to trade for the rest of 2021 and beyond. And if you're new to the stock, by the way, this is a digital finance platform. They do dozens of different things on the platform: checking account, saving account, personal loans, all different kinds of loans. We have crypto, we have stock trading, we have robo investing as well. So a lot of great things on this one-stop shop. I have several videos on my channel talking about this fintech company, and you might want to check that out. Link in the description or up here. And without further ado, let's get started.
SOFI begins trading this morning after its SPAC merger earlier this year, backed by Chamath Palihapitiya. Company's valued at nearly $9 billion. Also worth noting, SOFI is a six-time CNBC Disruptor 50 company and the seventh to make its market debut via SPAC. Joining us this morning is SOFI CEO Anthony Noto.
This is definitely a very interesting thing. I looked at the latest top 50 disruptor list, and SOFI was somehow not on it, I guess because it's already such a big company maybe and going public that they just decided to leave it off the list.
At the NASDAQ, I'm pretty sure. Anthony, congratulations.
Thank you, Carl. Thanks for having me as well.
You know, we've been tracking you and your journey at SOFI really since I think probably around your first day. And I wonder, for how long have you envisioned a SPAC merger as a possibility? Because certainly when you started with the company, it was just not the phenomenon that it is today.
So I kind of find it ridiculous, and you can look at various other interviews that they've done in the past with Anthony Noto, talking about, why did you choose a SPAC, SPAC this, SPAC that. Has nothing to do with the business fundamentals. It's ridiculous, and I don't know why. It's just like a hot topic, but I'm glad that we are no longer a SPAC and we can actually start to focus on this company for what it really is.
Yeah, the journey that we embarked on in February 2018 wasn't so much about becoming a public company as it was about building a complete suite of products on a mobile application to help us meet our members' needs at every point in their life and be there for every one of the major financial decisions they'd make and everything in between. We knew at some point we would have to think about going public, but we wanted to make sure we solidified not only that strategy, but actual results tied to that strategy, which we have. And it was at that point that we then decided to go public. And it was really just a question of what was the right vehicle? Do you do a direct listing? Do you do a regular way IPO? Do you do a SPAC merger IPO? And we obviously chose the path of doing a private investment plus a PIPE and a SPAC all combined in one. And we're really happy with the choice that we've made and the outcome we see here today.
Yeah, we see the shares up. It's going to be a nice open, it looks like, here on the first day, Anthony. I wonder, when you think about the tailwinds that you've been able to ride over the past 3 years or so, which have been the most impactful? And then what this current round is going to allow you to do in the year or two ahead?
Yeah, I would make a couple of points, Carl. First, because we are a broad-based suite of financial products all available on your mobile phone, from mortgages to refinancing student loans to personal loans, but also investing in single stocks. As you know, we pioneered fractional shares. We also offer cryptocurrency. We have 20 different cryptocurrencies available on the platform, and also robo investing. In addition to being able to get 2-day early paycheck into your SoFi Money account, and most recently credit cards. And because we have that broad suite of products, we benefit in different cycles in different products. So when rates were going up, as they were in 2018 going into 2019, we saw our personal loans really benefit. And when rates came down, we saw our student loan refinancing benefit, mortgage benefiting, and invest benefit. And so we kind of...
I think that's a really, really great point he made there, and that was such a great overview of what SOFI is and all the different services and products that they offer. As we get the digital banking license, I think his last point there is especially so true, because we do expect rates to probably go up in the next 2 or 3 years. That's what the Fed has been broadcasting and might happen sooner. And if that happens, then SoFi definitely benefits with the checking and savings accounts that they got going on there. Any deposits that they're getting, they can definitely benefit from that capital, and they could reuse that. And like you said, with the loans, you could charge higher interest rates for sure. And even if those times do not happen for a while, you have those other parts of the business that help make up for it. So I think that's a really great competitive moat. And having all those different services, as I mentioned, under one single platform, it's great for the consumer because they don't have to download 20 different apps and think about where the money is. Everything is right there, and so the friction for someone using this app is so much more reduced, and it just makes it so much more consumer friendly. People have a better perception of the app for sure. And the last thing there I really like is that the customer acquisition cost I've mentioned is going to be a lot lower, because if someone's already there, you're looking at the app, you put your money, you do the direct deposits there, you put your loans there. It's just going to be easier for that person to just be like, oh, they have this other service going on here. I'll just use this app for this service. Or I'm like, hey, I'm already doing my loans here. I might as well learn about investing and do some investing here. Oh, I heard about crypto. I might as well do crypto in this app here as well. So it's not like they have to try super hard to get someone to convert to their app, or to try it out at least. That's going to help, with lowering costs. They don't have to do so much advertising as well, I assume. So that's another great benefit about having everything under one umbrella.
Play on different parts of our portfolio during different outcomes. But the biggest trend that we've ridden over the last 3 years is just the secular acceleration from physical financial services to digital financial services. And that secular acceleration has only moved faster on the back of the stay-at-home phenomenon over the last year.
Right. Anthony, I want to ask you to
let the man finish his point. Jeez. But all right.
Clarify for investors your differentiator at SoFi, because I see so many fintech players kind of converging on serving all the consumers' needs. When you guys started out,
he's talking about Square and PayPal,
loans, and now you're broadening out. Affirm was a credit card alternative and is now broadening out. Robinhood, Coinbase, similar, getting this broader consumer vision. Why is SoFi, if I'm going to invest in one kind of consumer-leading fintech company, why is SoFi's philosophy and differentiation the one I want to focus on?
I mean, we kind of just mentioned the 10, 20 different things you could do on SoFi as opposed to the one or two that you could put on the other ones that he mentioned, but...
John, quite simply, we're the only one-stop shop to do all of your financial services needs on one platform. Others talk about adding other products and diversifying, but only SoFi's done it. SoFi is the only place you can take out 4 different types of loans. It's the only place you can invest on a mobile app in single stocks without commissions, fractional share, robo-advisor accounts, ETFs, 5 of our own ETFs, as well as cryptocurrency. Also a credit card, and in addition to that, SoFi Money, which allows you to spend, pay, and save any way that you want. And so many people have talked about broadening the product and broadening the suite of products, but only SoFi has done it on one mobile platform. If you wanted to invest in both cryptocurrency and single stocks and robo, you'd have to use at least 2 other apps if you didn't choose SoFi. And so we're very unique in that we are the only one-stop shop. We charge no fees on our loans. In addition to that, we charge no fees or overdraft fees as it relates to SoFi Money. We get your paycheck to you 2 days early. So each product is meant to be built best in class on its own. And after you use that product and we build trust with you, you'll choose your second product from us. And uniquely, not only are we a one-stop shop, we're making it so that each product works better when you use it with more than one of our products.
All right, guys, so that was the interview. I definitely liked how Anthony Noto held himself and presented the bullish case here, the whole business model that, some people may not really understand or admire or appreciate. With regards to that last question about why invest in SoFi as opposed to the 10, 20 other, 30 other fintech companies out there public on the market, some of them not even public yet. I think he definitely makes a big point there. And one thing I wanted to really kind of touch upon is SoFi, I will say personally, is not the best investing platform. Not for everyone. Some people may want a more vigorous platform that has a lot more fundamental technical analysis type of stuff. SoFi is more catered to the basic retail investor, but that's okay. They have their sort of niche or their sort of audience, and other platforms have their audience. But it's not just about investing, like he said. It's also very largely about personal finance, and the whole movement of this generation, my generation, the younger generation, to really take control of their finances and do stuff that is not really taught in school. Like when it comes to doing good with your money, actually getting good loans, not at 10, 20, 30%, but at more manageable levels. And over the long run, it's going to count more because, some companies, they can probably charge more and, make more money in the short term. But I really like that SoFi has a good image to millennials and they're able to get these customers. And over the long run, it's all about the long-term value of the customer as opposed to any short-term profits that you can make out of people. And gaining consumer trust when it comes to some of these products will go a long way when they decide to try out those 10, 15 other products that SoFi is going to have. So awesome stuff there. So when it comes to my position, guys, you can see here in SoFi Technologies, oh my God, it looks amazing, right? SoFi Technologies, $22.81 here, up 12%, after hours up about another percent here. And you can see that my shares are up $5,000, 28%, 29%. We've come a long way, man. The year to date, it was a struggle. Well, it's not even showing here. I'll probably put a screenshot, but it was a struggle. The stock has been bouncing around from, as low as 13 actually to, 19 and 20. It's been there back and forth. We had everything with the SPACs selling off. We have growth stocks, crashing and everyone's being bearish, but I've stuck it out all the way. I've been averaging down. A lot of my, subscribers, my viewers here, you guys are doing amazing. Some of you have even lower cost basis is around $15. I've seen 14 even, so congratulations. You are killing it. And I've been really trying to push this stock because I believe in it so much. Not just because I'm like pumping and dumping it, I'm obviously still holding my shares, but because I think in the long run, this is going to do very, very well. This is a company that is doing all the right things with great management. I have 1,000 shares, about 10% of my portfolio. This is, I believe, as of closing here today, my third largest position in my entire account, which is 150,000 plus. And I also did 10 covered calls at a strike price of $30 here. You can see right now the premium is 37. I did it a bit early, but I don't think SoFi, going into the SoFi stock price prediction here, I don't really think it's going to run straight to 30. I'd be very surprised. Looking at some of the technical analysis here, it does have a lot of momentum, but it may start to reach a point where it starts to slightly pull back here, in my personal opinion. The RSI is pretty high. Now, after a long consolidation period, it could continue to stay at an elevated momentum level, which could take it a bit higher still. But again, I'd be very surprised if it hits 30 right away. But if it does, I will have to exercise these covered calls, or I will get exercised on. Someone will buy my shares at $30, but at the end of the day, I might be okay with that. We'll see. June 18th is my expiration date, so it's pretty soon. Again, I don't think it will go up that much in that short amount of time. So I would get a $252 credit there. SoFi right now is probably trading at around a price to sales, I want to say around 20, which is not too high, but it's in kind of the upper echelon of growth stocks. but in the fintech world and at a 50% growth rate this year, I think that is warranted. Now, we will expect to see continued growth in the coming years. And again, I've done so much in-depth analysis on the business fundamentals, so check out the previous videos. I won't go too much into it right now. But if they continue on the track record that they are now and consistently beating their earnings and revenue as they have been, I think this will be a stock that reaches a potential of around $100 per share in the next coming years. I think in the next probably 3-4 years. So if you have the patience and if you have the time horizon, definitely, in my opinion, stick with the stock. Buy SOFI stock. I'm telling you right now. If you're late to the game, buy IPOE stock if you still think it's IPOE. I think SOFI is definitely going to be here to stay. So I hope you guys enjoyed this update. Make sure to like and subscribe. It definitely helps out with the channel. And comment down below if you are still gonna hold your SOFI shares here, SOFI stock, for the next foreseeable future. And stay with me, guys, for the next update. Until next time, remember to invest responsibly.